This is Brad Cohen of Mason-Dixon Funding. I was talking to Brad yesterday about the state of the market and what he's seeing as an experienced loan officer in Montgomery County. And I thought it would be beneficial for our listeners to tap into that conversation and just to hear from Brad here as an expert in the area on the local trends in the mortgage industry that he's seeing. So thanks for joining us today, Brad.
Sure.
And let's just pick up where we left off here. We are now in the spring of 2010 and just getting the ball rolling here on this real estate market for this summer and this year, 2010. What are you currently seeing right now in the mortgage industry?
The last couple weeks have been extremely busy with a lot of first-time home buyers trying to take advantage of the $8,000 tax credit before it expires on April 30th. Typically every Monday I'm writing anywhere from 5 to 10 lender letters for people that saw houses over the weekend. So that's a big motivator for people to start, getting out of the house and into a realtor's car. The other thing is with FHA, they're raising the mortgage insurance premium next week, April 5th, from 1 3/4 to 2 1/4%. So there's a lot of motivation to try to, minimize someone's closing costs and get in before that increase. And then also next week is another expiration, which is the mortgage-backed security bond, which the government has been had in place for about 15 months now, which has artificially kept rates below market. And that's set to expire on the 31st of March. So there's a big motivator for people to get out of the house and go write a contract because you don't see low house prices and low interest rates coincide for very long.
Gotcha. Now, I knew about all of those things. I think we talked about most of those yesterday except for that last one. So it sounds like there's going to be some changes here with the interest rate here at the end of March.
So next week, the Fed stops buying mortgage-backed securities, which in the last 15 months they've bought $1.25 trillion worth, and that's kept rates in the high fours, low fives.
Gotcha.
And that is set to expire next week. Now nobody knows for sure what's going to happen when the government pulls out of this this program. If things are going to spike up, or if they're going to slowly rise. They're definitely going to rise because they've been artificially subsidized for all this time. This week rates went up a 1/4 point on Wednesday. They actually dropped an 1/8 today, just based on a knee-jerk reaction from the Obama health care plan and the amount of money it's going to cost and where it's going to come from. And then there's disputes with the United States and China right now, and they're threatening to stop buying our U.S. debt. So a couple things made rates jump up a little bit this week, and then today they came back an 1/8 of a point. So they're still extremely competitive. 30-year fixed rates are 5%. Versus 4 7/8, up until Wednesday.
All right, gotcha. So rates are on a 30-year fixed mortgage right now is about 5%. Would you say?
5% with no points. 15 years are 4.375. 5-year arms are about 3 3/4. So
okay.
The rates are unbelievably attractive, and you can get a lot of house for the money right now, especially with the low sales prices and the way interest rates are.
Gotcha. Now, what are the best ways for home buyers to keep tabs on these interest rates? Aside from calling you, it sounds like you kind of tapped into that market real time.
Got to stay in touch with their lender because rates change every single day. On Wednesday when the bottom looked like it was falling out, rates, we had 4 reprices for the worst during the day. So, just stay in contact with your lender. You can click on Yahoo Finance and see what's going on. Every week the Washington Post puts out the rates in the top right-hand corner of the paper on the real estate section, so you can always, keep tabs on it. But, they're very volatile, so.
Yeah, for sure. I've definitely seen some things change quickly in my experience. Mm-hmm. Now, you mentioned that you're working with a lot of first-time home buyers, taking advantage of the tax credit that's set to expire here at the end of next month. Mm-hmm. What loans are first-time home buyers typically getting right now? Is it still the FHA programs, or you had talked yesterday?
Predominant. Not even predominant. I'd say maybe 50% are FHAs, and the other 50 are conventional. Mm-hmm. Because conventional, you can still get in with 10% down. You can pay a one-time upfront fee to eliminate the mortgage insurance. Some people were good savers and have money to put down, and then there's some people who who didn't have as much money to save up. It just depends on how long they, were sitting out of the market. It could be like a new, college graduate, obviously hasn't had much work experience and much time to save, but, But it varies. But the FHA is definitely a very big. It's definitely a big product right now because the 3.5% down payment and what is also ending next week is that you could get before with FHA up to 6% seller credit. That's actually being reduced down to 3% on April 5th as well.
Right.
So that's another change that we're going to see.
Okay, and that's the middle of April.
That's April 5th. Anything any FHA case numbers that are pulled after April 5th and beyond are subject to only a 3% seller credit. In Montgomery County, or Virginia, or D.C., 3% will get you in with your closing costs and setting up your escrow account.
Right.
If you're paying any origination points or anything to buy your rate down, then obviously it's gonna go over the 3%. But with 3%, seller credit, if you can get that, you should just be getting in with just your down payment.
Gotcha. Cool. Well, is there anything else that you'd like that you're currently sharing with the folks that are kind of on the fence right now with whether to purchase this year or wait it out?
If you're interested in buying a house, now is definitely a good time to do it. Contact your you or a realtor, get in their car and go look for a house because in a year from now or 2 years from now, people are going to be kicking themselves that they didn't take advantage of this opportunity because, like I said, rates and low house prices do not coincide forever. I mean, I know I bought my first condo in 1998 for $104,000, and I sold it 4 years later for $180,000, and then I was able to buy a townhouse, for $350,000 with the profit from that condo, and sold it 5 years later for a $300,000 profit. So real estate, over time always goes up. Obviously, everything has come down in the last 3 or 4 years, but there's going to be a bottom very, very soon, and things are going to start rising. So you want to be on the right side of history and get in and take advantage of this opportunity because it definitely will not last forever.
Right, and the rates in particular, I mean, historically, I don't know how low you've ever seen them, but I imagine we're pretty close to the lowest
rates we've had for the last 15 months have been the absolute lowest I've ever seen.
Right.
I mean, I even refinanced my own loan, last month for the second time this year because I was able to, pay a big chunk towards principal over the last year or so. But no, these are absolutely the lowest rates I've ever seen. I've been doing this 13 years, and I close anywhere from 300 to 400 transactions annually. So it's a phenomenal time to get in and take advantage of the market right now.
Okay, great. Now, how about the new GFE changes? Is that's already gone into effect, right?
It went into effect beginning of this year. So January 4th was the first day people had to start implementing the new GFE and HUD-1 settlement statement. There was a learning curve involved with it, and it's definitely, the lender you choose better make sure his numbers are accurate or he's writing a check at settlement. Because the new law is if the numbers are off, some of the areas have a 10% tolerance, some of them have a 0 tolerance, but if the lender's off on what he disclosed initially versus what's being shown in settlement, then the loan officer, not the company, the actual loan officer is responsible for making up the difference.
Gotcha.
So it really holds people's feet to the fire, make sure their estimates are dead on when they put some numbers out there. So there's no last-minute bait and switch and telling people, oh, I got to charge you a point because your loan was hard to do. Whatever it is, all that stuff is out the window.
Well, it's important that buyers get educated on these changes. I mean, it sounds like there's a lot of changes here that have happened relatively recently. The GFE is one of them. The changes in the FHA guidelines and now the changes that are happening next month that you mentioned. So it's important that they educate themselves, that they work with folks that are on top of these changes, and they shouldn't feel nervous or scared about purchasing real estate. It's still a great opportunity, but you do need to educate yourself on what your options are now.
Absolutely.
Okay, well, is there anything else that you'd like to leave our listeners with here before we go? I know that you're busy.
No, that's it. Get in the car this weekend. Take advantage of the weather's going to be, 60 degrees and sunny tomorrow, so it's going to be a great day to get into a clean car and go look at some nice houses out there.
But it's got to be a clean one, though.
It's got to be a clean one, yeah. Very important to get into a clean car.
Well, I'm going to go get my washcloths right now and clean my own car so I can take my clients out tomorrow this weekend. So
there you go. It's a good move.
All right, Brad. Well, I'll let you go. Hope you have a good weekend, and I appreciate your time.
All right, thanks, Evan. Have a good one.